What is up, YouTube? I'm back again with another video. And by title of this video, you already know I'm talking about why you are still unprofitable. Okay, so real quick before we go any further, I just want to say I'm giving away $25 to a new random subscriber in my next video. So all you gotta do is like this video, subscribe. I'm gonna see your name, and I'm gonna pick a random subscriber to give $25 gift card to in my next video. All right. So all you gotta do is like this video, subscribe, and let's get into the meat of things. All right, it's about to be a pretty basic, pretty straightforward video right here. I wanted to explain to you guys why you're still unprofitable in Big 2026. All right, so let's get it. The reason why you're still unprofitable this year for some of you out there is because you're trading poor market conditions. Now, what do I define as poor market conditions? Is if you're a trend trader, you have absolutely no business trying to trade in this type of market. Like, what are you doing, bro? What are you doing? I had to point this out because I'm an experienced trader myself, and I know that a lot of traders struggle with this. Is you have a setup, you have an edge that works in trendy market conditions, and you're trying to play that edge in a range bound market. So you could call this example a range bound market. You could call it a barbed wire type of market. All right, a market where you have a lot of choppy highs being formed at the tops here and choppy lows. So if you're a buyer trying to buy the breakout or any of these highs, then you're going to be losing money. And if you're a seller, short seller, trying to sell the lows of any of these breakouts, then you're also going to be losing money. All right. So these market conditions, no matter how much you dive deeper as a trader, if you're not prepared to engage in this type of market conditions, they will cut you, and they will cut you a lot. That's why I had to talk about this video, because some of you already have a profitable edge, but sometimes you may make money in a market that is trending, but you can't tell the difference between executing your strategy in a market that is trending clearly or in a market that is choppy, sideways, range bound. Now, quick disclaimer here before I go any further. You can actually trade these type of markets. You can trade range bound markets, right? And this video is for, it don't matter if you're a swing trader, day trader, scalper. All these titles are just limits. As long as you trade the financial markets, this video is for you. All right? It is for you. Because this can be a 1 minute problem, like right now on the 1 minute chart. If you're a day trader trying to pay attention on the 1 minute, 5 minute, 15 minute, you're going to encounter this type of thing during the session. If you're a swing trader on the higher time frames, it could be the daily market that is showing a range bound condition. It could be the hourly time frames that are showing range bound conditions. And if you cannot tell the difference between a range bound and a clear trend market, first of all, then you need to go back to the drawing books. But when you can tell the difference between a range bound market and a trendy market, then what you need to develop is the patience and the self-control to not engage in a market that you're not prepared to face. All right. So my mentor, Al Brooks, he used to say that in these barbed wire markets, range bound markets, what you really want to do is buy the lows and buy lower lows, sell the highs and sell higher highs. And that is actually how I go about trading range bound markets. But most of the time, and a lot of the time, I end up just not trading at all. Like, I'd rather sit by the sidelines and wait for beautiful trends, sessions that are trending, for me to execute. All right. So look at this market right now. Let's jump into this market. I'm going to show you this example. So this pink line right here, this vertical line is showing the market open. So this is the first 1 minute candle from the market open at 9:30. And as you can see here, the market rallies up a little bit, right? So it rallies up a little bit. It rallies a couple points on the Dow. This is the Dow, by the way. So it rallies about 70, 80 points before taking a nosedive. Now, if you caught this move, good for you. If you caught not the move up, but the move away from this, right? So if you cut this short from that impulsive move up that was a manipulation, a Judas swing if you call it, if you cut that short setup and sold the market lower, that's good for you. That's a good short. But now, what I'm talking about is this, right? What I'm talking about is this. This right here. Y'all can see this. This type of market condition is what I'm talking about, guys. So now, say for example, your higher time frame confluences are telling you to stay short to sell the market, right? So you think that shorting the market is a good idea. Or perhaps we've just run out a previous low and your confluences are telling you should be a buyer in the market. When I look at this, from a short perspective, from a seller's perspective, coming up from this move or moving forward after this move, what am I looking at here? On this 1 minute chart, I'm noticing that just like market structure wants to do, price wants to make lower lows. But every time after this candle right here, this last impulse leg down, you notice that all the lows are being bought up with a lot of bullish pressure. So that's already telling you that hold on a second with your gas. Don't keep on loading up more shorts to your size. Maybe you should actually consider taking profit now because bulls are interested in taking that position, right? So you're a short seller. That's probably not the best time to come into the market. Now you're a bull, boom, and maybe you're scalping. You could take this move upwards, but because you don't realize it is a trading range that we're now entering, you don't realize that we're entering a barbed wire type of condition. You might take this long, and you're gonna be in profit, right? So you're gonna be in profit. Maybe you're catching this move, this swing. So 118, 120 points, that's decent, right? But the problem is you're not taking profit. Why? Because you think that maybe we're gonna have a reversal on the day, and we're going to want to trade into what day's highs, or at least a premium of the day's range. But what happens? Then the market goes against your position. If you didn't take profit at that high, now you're underwater or you're back at break even. So at this point now, you're a bull, you're buying lows, but you're holding for a breakout. You're never going to make money on this move. Price is never trying to go there. As a matter of fact, price is going to go below your low. At some point, price is going to go and hit your stop. You get out. Now, sellers, either you're selling the breakouts, so you're selling anytime price breaks the low, right? So let's say, for example, here, you sold short right here. You sold this move, you have a stop above this high or this high, and you're anticipating price to break lower. But it doesn't. What does it do? It goes against your stop. It goes to hit you out. You're a seller, you're a short seller, you think that the market is going to move. So you're selling this low. What happens? Price goes up and hits your stop. So do you see how, regardless of what side of the market you're on, the probability of you catching a winning trade is lesser than the probability of you getting cooked on this in this market? So now some of you are probably wondering, like, oh, but John, you're on the 1 minute chart. Well, brothers and sisters, yes, you're right. This is the 1 minute chart. But market condition is fractal. This same thing repeats itself on the hourly. So if you're a swing trader, you're going to encounter the same type of thing. On a different day, different hour, you're going to encounter the same type of thing. It don't matter if you're weekly, daily, hourly. If you can't tell when the market is consolidating, when the market is accumulating orders, it's in a range-bound market that is dangerous for both short and both long sellers, then you shouldn't be managing money. If you can't control yourself and say that I don't have an edge in this type of market, this type of market is probably going to make me lose the profits I've already made, I'm not going to engage. If you can't tell yourself that and actually obey it, then you should not be managing money. Okay. So going back to this. Now, the reason I'm talking about this and I said it's keeping you unprofitable is because besides the fact that it is not likely for you to make money as a short or long seller, by the time you get stopped out the first time, maybe break even or you take a small loss, you get stopped out the second time, now your mental capital has been depleted. Now you're no longer at equilibrium. Now you're no longer thinking the same or clearly the way you were when the market first started. So now you're likely to sin. You're likely to overtrade on your next entry. You're likely to over leverage on your next entry. You're likely to keep over trading in that session. You're likely to do something stupid, which is why I suggest you just avoid it altogether. Wait for wonderful market conditions. All right. And the next thing is that this type of conditions can last for a minute. So the reason why I actually showed you guys this on the 1 minute chart is because if you're a 1 minute type trader like myself, a lot of my entry models are based off of 1 minute patterns. This pink line, like I said, delineates the market open. So this is 9:30 New York session, right? Now this last impulse leg occurs at 10:25 in the morning, and the market eventually breaks out, and it breaks out at 2:33. That is 4 hours and 32 minutes of sideways motion. Some of you do not have the patience to sit on a trade for 4 hours. Some of you do not have the patience to sit on your hand and do nothing for 4 hours. Which in of itself is a whole another psychological problem for another video, another day. But my point is, this type of choppy barbed wire market that is dangerous for beginners can last for hours, it can last for days. Alright? And I think the reason why some of you out here are still struggling with this video, struggling with this type of issue is because number one is you're trying to trade, maybe you're trying to trade 1 minute or the 5 minute, and you're not acknowledging the significance of the hourly time frames, the higher time frames. You're looking at price based off of, what can I take right now? What moves can I make right now? What type of money can I make right now on this small time frame? You're not considering the fact that on the higher time frame, which is where the money is at, price is doing something. So if the higher time frame is altogether bullish, then that is zoom out, is what I'm trying to say. Zoom out. Stop looking at the 1 minute. Stop looking at the 5 minute. Stop looking at the 15 minute. Look at the hourlies. And when you understand what the higher time frames are trying to do, that reassurance from knowing what big amounts of cash coming into the market is trying to do will cause you to be patient. Because at the end of the day, what you're really trying to do is align with that big money, right? What you're trying to do is align with that big money, the order flow. And when you understand where the orders are flowing on the higher time frame, then your mind can reset and be like, okay, I know where this market is going. I'm going to still go with the market, but now is not the best time for me to participate. You get what I'm saying? So that goes back to what I said about patience. Some of you are not patient enough to wait for the market to eventually change, knowing that order flow is going a certain way in the high time frame. You're not patient enough for the market to change from this type of condition to a clear trend. Because what happens? Some of you might end up blowing accounts in this range, and then only for the market to eventually break out and start selling again. Whole time you thought the market was going to sell short, but your problem was you kept on selling the breakouts lower, and the market kept on going against you. It happened the first time, you took the loss, cool. Happened the second time, you're break even, cool. Happened the third time, now you're leveraging twice your size. You're leveraging 3, 4, 5 times your size. Next thing you know, you've lost a whole lot of shit ton of money, or you've blown your account entirely. Then the market goes where it wants to go. So that is a problem that's keeping you unprofitable. And what I do is, me personally, I don't trade if I don't have an edge. I told you guys I have an edge in this type of markets, but I still prefer to not trade these markets. I have an edge in this type of markets, but realistically, if I'm trading a range bound market, I know I want to buy the low and I want to buy beneath that low. If I buy that low or beneath that low and I take that trade and eventually goes back, into the range and I'm in profit and I sell at the high, because I know the principles of a range, that don't mean shit to me. Because the market's going to do what it wants to do. So I took that position and I made some money and I closed the trade. That's it. I'm done. I'm not trying to keep on entering this range just because I know how to trade a range. That goes back to self-control against impulse. Now, the second thing I do, which is what I talked about in my last video, if you watch my Dallas vlog where I was by the lakeside, I told you guys, what I do now is I just wait for the higher time frame to give me an edge, to give me a setup. Like I would swing trade it. Like I would short term trade the higher time frame on the 2 hour, 1 hour time frame. that would hold for 2 days or 3 days or 4 days or even a week, like this short position I mentioned in my Discord has happened. But I would do that, and then I would just trade the New York session within that higher time frame setup. Let me show you guys. Let me show you what I'm talking about. Real quick. I'm about to end this video in a minute. But I had to come and put you all on game, bro. Real quick. I don't want any of my homeboys or homegirls losing money anymore. Listen. For example, here's a trade I called last week. Or no, not last week, 2 weeks ago. Because last week's trade that I called, we just closed out of it today for profit. And I'll show you guys that in the next picture. But here's the trade I called. So I'm telling my people to sell short, right? And you can join this community for free. Just text me how. Just comment how in this video. How, H-O-W, and I'll tell you how you can join this community for free. But I tell my people, sell short there, right? Y'all can see what I'm looking at. And then the market, what does it do? It eventually goes to our TP, our second TP, full profit. Now this is on the 4-hour time frame. Within the 4-hour time frame, this probably took 2 days or 1.5 sessions to complete. Since knowing that I want to sell the market on the higher time frame, I'm going to go into the session by session type setting, and I'm going to be selling on the 15 minutes and the 1 minute chart. I'm going to be selling all the impulsive legs downwards in alignment with the higher time frame. That way I have a beautiful trend down all the time, so I can avoid trading in these type of conditions. You know, I just want to show you guys what I'm talking about. So now, for example, this is when, look at this for now. Look at this, and I'm gonna end the video here. All right, let's go back to another chart example. Not this market. Let's go back to another chart example right here. All right. Funny enough, this is last week Friday. So the previous picture I showed you with the range was this week's Friday. Now look at last week Friday. This is an example of a market that is trending downwards with a clear trend. You can get in here at this lows right here, have price go against you for a little bit, and eventually it's going to move in your direction. You can think you're supposed to sell here, get in, have price go against you for a little bit, then it goes in the right direction. When the market is actually trending, it is a lot easier for it to save your butts. What I mean by that is you can be not so precise on your entry and price should go against you, but because of the fact that price is trending clearly that day, eventually it is going to go in your direction and keep on falling. Or otherwise, you could be bullish and take a buy, and you say you bought the high, price retraces back into the range, then continuation higher. Of course, you're in drawdown when it traded back into the range, but on the continuation move, now you're in profit. But because the market is trending clearly on such a day, it's going to save your asses. Now, when you're playing in a range-bound market, you don't have that type of safety net. Price is not on your side, which is why you shouldn't be trading that. So that's what I do. What I do is I just sit out the markets. I have an edge, and I might trade it, but I'm not going to over leverage. Even when I make money, I'm not going to keep trading just because I have an edge. All right, and that's what I think you guys should do too. But that's it right there. That's the video. That's why some of you are still unprofitable. Avoid this type of market conditions at all costs. And listen, it's been love, fun. It's your boy Saint World. And like I said, like this video, subscribe, and I'll be giving away $25 to a random subscriber in my next video. Love, peace, my friends, and blessings from Jah Rastafari. Have a wonderful weekend.